Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Tuesday, June 6, 2023. Before I click on the charts, please click like, subscribe, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we have a full suite of daily and weekly analytical videos just like this in the daily Triple Q, the daily SPY report, weekly analysis, the S&P 500, NASDAQ 100, the long bond ETF, the TLT, and two individual stock picks a week that you never see on YouTube that cater to sort of the longer term swing traders, 3 to 5 weeks out, as well as the near term investors, 3 to 5 months out. Always looking for 20% moves on the underlying stocks itself. We put out two a week, all of that for $47 a month, and on top of it, a 5-day free trial that comes with it. So if you don't like what you see, within 5 days, you can bail for no cost to you whatsoever. So on with the daily Tesla report. I just want to backtrack a little bit and show and remind you that last week we closed above this long-term channel top. You could say it was 18 months, almost 2 years in the making. This goes back to I think this is an October, November high of 414.49. So we closed above 206.01. You can see over here to the far right, it is a 5-star level, meaning it can contain annual selling pressures now, and above which continued gains are expected as we move into June, July, August, September. I will mention that the SPY and the Q have both posted very similar buy signals over the last few weeks, as well as Apple over the last month and a half, NVIDIA over the last week or two. So there seems to be a broader market consensus for longer-term bullish continuation. With respect to Tesla, 221 and a quarter. I'm going to hold my ground here as a mere session containment level. Now, under other contexts, if it were not for having violated this long-term channel top just last week, I might consider this a 3 or a 4-star resistance area, but I'm going to keep it as session containment. I think this market is prone to push through it here sooner than later. If we close above 221 and a quarter today, we should see 233.33 within the week. 233.33, I don't have it labeled here, but if you look at the spike low and that subsequent rally, that spike low was February of 22. 233.33. So closing today above 221 and a quarter, 233.33, likely within 3 to 5 days, where we can once again top out on a daily basis. I'm going to say that holding above 206.01 will keep the mid band of this rising channel structure at 239.39 as a 2 to 3 week target. And of course, if we were over the next week or so to settle above 233.33, 239.39, then likely within a matter of 3 to 5 more days. So 2 to 3 week objective at 239.39, a 2 to 3 month objective at 268.29. This rising channel top is our next big picture objective. And once again, if you at this point in time, if we dip back into the low, into the 206.01 region over the coming days, that would be an opportunity to buy at a better price the 268, 270, 275 out of the money calls that don't expire for at least, I would go 6 months out. So you're less susceptible to that theta element, the time decay element. And so that is kind of the big picture. I don't see a sign of weakness as we move into later June unless we were to close this week, Friday, back below 206.01. And that's certainly not going to happen today. Let's take a look at... I'm going to take a look here at, let's see, I'm going to find there we are. This is probably a good chart to start with. We've got 217.65, which is that February 23 high. I have that as just a mere minor point. And I've got 213.77. That is a former rising channel top that we pushed through about a week ago, held the next day, pushed through the following day, gapped above on Friday. Today we continued higher to that 221 and 3/4, 3/8 Fibonacci. For day traders, it is being short if you did so, or getting short at 221 and a quarter, anticipating 213.77 perhaps, where profits can be taken, and you might even consider going long for part of the day at 213.77. Now, if we do close below 213.77 today, that does pivot the market south tomorrow to the 206.01 long-term channel top, where once again we can bottom out not only for the week, but even through the rest of the year. It would be a settlement below 206.01 at the end of this week that it would indicate longer-term bullish continuation. I'll mention a couple of things here on the daily chart, most notably this 200.11 new rising one-third speed line, trend defining from the April low. So in terms of upward momentum that remains intact following that April low from that rally, 200.11 I have as a session containment level, and I just want to give you the heads up that over the next on the 9th, what is that? Is that Friday? I think that is Friday. So on Friday of this week, this rising speed line, so long as the high remains good that we put out on Monday at 221.29, if we continue to ease back, this rising speed line will gain increased importance. In other words, yes, a weekly settlement below 206.01 on that weekly chart would be considered bearish. It would need to be by a 1% margin, FYI, and we'll put that out later in the week. But what I like about this chart here is we have a daily speed line that is trend defining and respectable in its own right, that is that deserves to be a 3-star support. I only have a session containment level now because of its distance from 206.01. But as we continue into later week, this speed line will converge with 206.01 and it will become a range of support that is bottom picking territory as we move into July trade. And as we move into August trade, even with 206.01, and not unless we were to close below this speed line, do I see this market pivoting southward, aggressively southward, actually, as we move into later June. And so, yes, these are misweighted right now. I'm talking 189.67 to 191.56, because under that context, closing below this 200.11 rising speed line, converging later in the week with 206.01, I would then anticipate the rising two-thirds speed line at 176.28. So keep that in mind. We're not going to see that today, but later in the week, if we close below this 200.11 speed line, I will be telling you to liquidate those out of the money calls that you may have purchased in the 240s or the 260s. And in turn, if you're more of a 2 to 3 week swing trader, you would reach for 176, 178 out of the money puts, because this rising two-thirds speed line would become the next big picture objective. In terms of the big picture, though, as I was saying last week, that if we close back below 206.01, if we close back below this formation by a 1% margin on Friday, I think we're setting up for a low to mid 150s objective again. Keep in mind that a failure to follow through on a long-term buy signal, the rejection thereof, is considered a valid sign of weakness over the near to midterm time horizon. In other words, I think that rejection would likely yield this 153.74 channel bottom within a month or two of closing back below 206.01. But I don't want to get too far ahead of myself. We're back into the day itself. I can just point to the far right here and mention 221.25, decent day resistance, able to contain session strength, and below which we can fall to 213.77, able to contain intraday selling. We could trade in between those 2 points for a good part of the day. If we close below 213.77, 206.01 is likely tomorrow. If we close above 221.25, 233.33 is likely within several days. And I'm looking at that 239.39 level, which remains a 2 to 3 week target anyway. If we close today, and let's just say the week itself above 221.25, this 2 to 3 week objective at 239.39 is likely to be realized by the end of next week. I think that that's about all that needs to be said for Tuesday's Tesla. I'll be back tomorrow, the Wednesdays. Please click like, subscribe, share, and check out wickedstocks.com.